And if you look at certain weird things, like there's so many weird comparisons to the dot-com era. Like, for instance, the market cap for crypto had gotten to about 3 trillion. And at the height of the dot-com era, it was 2.9 trillion. If you looked at the Super Bowl, right, the Super Bowl in 2000 was called the dot-com Super Bowl because there were so many dot-com commercials. Go back to this last Super Bowl in February, we saw kind of the same thing. Yeah, so I mean, the beautiful thing about what I do is, and I trade stocks, commodities, currencies, and crypto, is just that I'm a chart guy. And so as long as there's volume, and this is why I mainly trade Bitcoin when it comes to cryptos, maybe Ethereum a little bit, Solana, some of the more active ones, but you need that liquidity to be a safe trader. And what I mean by that is that the less liquidity you have, the more risk the individual investor takes on, that a bigger player can kind of manipulate or create some price swing that you can't predict. And so the key is, again, Bitcoin, very, very liquid, easy to get in and out. Same thing with Ethereum. So I think those are the main reasons why I trade mainly Bitcoin. Yeah, so I mean, volume definitely plays a role, right? So if you see higher volume candles, they generally coincide with either flushes or pops, but I kind of keep paying attention to that. I would say the best example of that would be go back to October, November, when Bitcoin was just taking out those April highs at 69,000, and the volume was very, very thin up there. And that was telling me that big money was not buying heavily. And it's just one of the many, many warning signals that there were on Bitcoin at that point in time, considering all the hype. And I was at the Dubai conference. I was just got back from it this year. Last year I was there, and I mean the hype was just so incredible. Something I've almost never seen before, except maybe in the dot-com era. But it was nuts. But yeah, I mean, for those type of things, but really when it comes down to it, I just look at charts and I let the charts tell me, right? It's not about me forcing my views on charts. It's about them saying, all right, this is the pattern formation that's there. That's telling me there's a bounce coming or a pullback or some sort of pivot coming. Yeah, it definitely did. I mean, the one of the keys to being a good trader or investor is to read the psychology of the market. And one thing I've become very aware of is that when too many people are bullish, then it's time to be more careful and look bearish. And I, for sure at that point, it was one of those events where I couldn't believe the insanity going on. It was kind of the same in stocks, right? I mean, you had AMC, you had GameStop, those type of runs going on. And if you look at certain weird things, like there's so many weird comparisons to the dot-com era. Like, for instance, the market cap for crypto had gotten to about 3 trillion. And at the height of the dot-com era, it was 2.9 trillion. If you looked at the Super Bowl, right, the Super Bowl in 2000 was called the dot-com Super Bowl because there were so many dot-com commercials. Go back to this last Super Bowl in February, we saw kind of the same thing. So eerily similar type of things that basically raise the PR status. It's like PR for crypto. And so what you have is you have this scenario where if there was anyone on the fence that kind of liked crypto but hadn't gotten in yet, that was what coaxed them all in. And I always tell people, like, if you have 10 people in a market, right, just 10, in the beginning, only one person's long. As it goes up, 2, 3, 4, 5, 6, basically at the high of the chart, that last person goes long. And then what you have to remember is you have to say, okay, well, who's going to buy it now? If everyone's already long, if all 10 are long, there's no one left. And we've kind of exhausted that because of all the hype. You just remember you just had seen the launch of the Bitcoin futures ETF at that point too. So there was immense hype around that as well. And it's just, I mean, the emotion and craziness was just, I mean, I thought I was going to get tarred and feathered. I mean, it was like that crazy, so for me, it's regulation. And I know that sounds super counterintuitive.
The opposite of what they wanted, right?
Right.
Yeah.
Everyone's like, keep the government out and everything like that. I'm like, I'm an investor. Bring the government in, because as soon as the government comes in and says, these are the rules, then you know what? Institutions are going to say, okay, we know the rules now. Now we can actually decide if we're going to invest. Inevitably, a certain amount of money is going to come in from the institutional side. But I think that's what's the issue right now, is that you have a lot of people that are very intrigued. I mean, hedge funds around the world are like, I'd really love to get exposure down here at 20 or sub 20,000, but I don't know what the SEC is going to say in the next month or two. And so we just have to sit on the sidelines. So for me, I understand that you don't want the regulatory side, but at the same time, if you're going to hope that Bitcoin goes to $500,000 or even 100,000, you have to get big money in the door. That includes pension funds and all these other players. then it can really rise. So for me, that would be a turning point. The beauty of it is that I think if that was announced, you'd see an initial dump because people would freak out. And then you got to be strong enough emotionally or with lack of emotion to buy that dip. I mean, so I saw someone just asking for the dollar yen chart, and here it is right here. But I mean, I really don't put a lot of indicators on my chart to start with. I might add in moving averages, Fibonacci, stuff that I really have as a core, but I don't like charts that are over cluttered because I start to get kind of a little bit distracted by too many things. So I really let the charts, talk to me. And one of the things I'm looking at here in terms of the dollar yen is, number one, you're, like you said, you're coming up to this, you got this high pivot, basically you're hitting here 148, and then you got the 150 even number. And one of the things about even numbers is that it's psychologically important to investors and traders. So for me, I'm starting to actually nibble a little bit on the short side of the dollar yen and starting to pick up a little bit on the long side of the yen here, just because I do expect a little bit of a retrace, not necessarily a long-term trend change, but just as a trade in the near term. So that's, part of it. And then I would say with my analysis as things go, I basically get up in the morning. I usually throw on CNBC, not because I listen to what their analysis is, but I like to gauge the global sentiment. So as a macro investor, as well as a swing trader, I want to know, are people overly bullish? Are they under? What's the news of the day? What do I need to know? What stocks are mainly moving, right? So I think that's another big factor, is that as a trader, especially as a day trader and swing trader, you don't trade something that's not moving, right? That's where you're going to get chopped by the algorithms and the bots. But instead, you want to find things that are seeing emotional reactions, right? Where is everyone rushing out of or rushing into? And then is there a technical level that you can kind of go there? But certainly, I think, dollar yen is, you're right on this. To think that crypto is as dead as it is, and you're seeing more volatility in the bond market, the stock market, and currency markets is wild right now. Yeah. Price action is basically caused by investors and traders. And I think one of the big misconceptions that a lot of the retail crowd has is that charts are somehow different, right? But in reality, when you're trading a chart, you're basically trading the masses in terms of their emotion, right? Greed and fear. And so you're really and that's why gauging psychology of the market is so important, is because that goes hand in hand with the charts. When you get to levels that are ridiculously extended, do you have that max bullishness that is kind of also, confirming that feeling of that, all right, this is way out of control, and you start to look for those pivot points. And again, a lot of people will say, like, don't buy a falling knife, don't, try to short something that's crazy. But I think when you utilize the charts correctly and you kind of do it in a safe manner, you can do it in a safe manner. That's where I make my biggest scores, is finding these pivot points.